Well, we have the issue with Biden's spending plan, an issue with Omicron. Should we be focusing on, issues of stagflation instead of inflation now that growth could be at risk?
I don't think the inflation risk has certainly gone away by any means. I think clearly the Fed, as we all know, has become much more aggressive. But the risk is here that Omicron could end up pushing inflation risks even higher if it results in further supply chain restrictions. And, we've seen that in the past with Delta and the significant impact it had on supply chain. So in a way, it could push inflation concerns on the supply side even higher. It's obviously difficult for central banks to deal with that. And on the growth front, of course, as you say, more mobility restrictions that we're seeing globally being put into place is having clearly a negative impact on markets, but it could result in weaker growth profile next year. Now, as to the Build Back Better plan, we still expect it to pass in some form or shape into next year, but obviously it's going to be a less of a price tag than we're seeing currently, and it may have a slightly more negative impact on growth. But we don't think it's going to have a substantial hit to the U.S. economy next year.
Stocks are higher today, rebounding from yesterday's massive sell-off. Can equities remain in the positive with Omicron, with restrictions?
It's a tough one. I think clearly going into year end, there's money being taken off the table. Liquidity is thinning. There's just less people around. And after very strong gains this year in equity markets, it's not surprising we're seeing a little bit of profit taking. Next year, we still think there is some upside for equities. It still looks like there's going to be enough stimulus in the pipeline, even with the Fed becoming more aggressive, for equities to move higher. But clearly, the big run in equity markets we've seen in the last couple of years is a big risk of not being repeated. So we could see a much less extensive upside on equities into next year and risk assets in general.
Mitul, what's the impact on the dollar? We probably will get this Build Back Better bill through. Maybe it will be watered down a little bit. But overall, with the Fed tightening and being hawkish, we have the baton almost being passed to the government with a fiscal spending package, infrastructure spending, and the like here as well. What does this mean for the greenback overall?
Well, I think the first point I would note is that even with all of this infrastructure spending, we had the 1.2 trillion package. Build Back Better could end up with maybe 1.75 or even less trillion. But it's not going to be front-loaded. A lot of this is going to be done over a longer-term horizon. So in reality, it's not going to have an immediate boost to growth. So I think what we're really looking at next year, for example, in the US, we're looking at growth to end the year on a 2.5% year-on-year basis next year from around 5.3% this year. So it's quite a sharp slowdown. When you add that to growth elsewhere, China, for instance, is likely to see growth at a 5% handle from 8% or so this year. So I think growth is certainly going to lose momentum, and Omicron is probably adding to that risk of slower momentum. But I wouldn't look for fiscal spending to be the sort of magic weapon here to try and boost growth, because I don't think that's going to happen next year. And sorry, and it has to do your dollar, maybe just yeah.
Yeah, you missed the dollar part of my question, Mitul.
I want to ask you.
Go on, Mitul.
I want to ask you the question of the day, Mitul. How will more Omicron curbs affect assets?
Okay, so look, I think let's start with the dollar, because as Rishaad, I missed that out. So look, I think firstly, I think going into the end of the year, dollar's probably going to consolidate further. Right? We don't see big upside from here. Our forecasts generally show the dollar softening into next year. Now, of course, if Omicron results in a sharp worsening in risk appetite, a move to safe haven assets, and US growth will still look reasonably upbeat compared to elsewhere in the world in that environment, it may be more positive for the US dollar next year than we're anticipating. So I think from a dollar perspective, at least for now, we're looking at downside, but with risks here that Omicron could change that picture entirely if it ends up being much worse than anticipated. We talked about the impact on equities. Clearly, if Omicron results in big supply chain issues, a lot of the reopening stocks that we've seen rally this year are going to come under much more risk. Growth stocks could do somewhat better. So we may see, again, more of that growth outperformance. And for fixed income, look, we think yields are going to continue to move higher. We're looking for 10-year yields in the US Treasuries to get up to 2% by end of next year, where, in the near term, we may see more curve flattening given the Omicron situation, but we still end up in our view, that we'll end up with a steeper curve next year and a move in the 10-year to around 2%, as I mentioned.
Give us a sense, we're talking about the dollar and the direction it goes in earlier. And what does it mean for Asian currencies right now?
I think right now, Asian currencies will probably stay on the back foot. We've had, obviously, dollar strength throughout the last few months. But Asia generally has been relatively well shielded from some of that dollar move. If you look at other emerging market regions, we've seen some really pronounced moves in currencies. And yet Asia hasn't been as affected as much as you would have expected, given the move in US rates and the virus concerns, et cetera. So there has been a little bit of an improvement in sentiment towards Asia. But nonetheless, for now, I think it's going to be a struggle to see Asian currencies strengthen. Apart from, I would add, the RMB, the Chinese currency, continues to outperform despite the strength of the US dollar.
I'm going to come to the RMB in a bit, but I want to get to actually the worst performance this quarter, and that's the rupee. Overall this year, it's the baht. But why is the rupee weaker? I mean, there's been a lot of fund flows out of the country. Can we put it at that doorstep, or can we put it on the high oil price?
I think it's a combination, Rish. Oil prices clearly are negative for India's oil import bill. And taking a look at that in recent months, it's really risen significantly. And what we've seen in terms of the trade numbers, India's trade numbers in the last 2 or 3 months have been quite poor. We've had a worsening in the trade position. Current account seems to be worsening as well. And of course, that needs some sort of financing. And if you've got equity bond outflows that we've been seeing from foreign investors, that clearly has been putting pressure on the rupee. And of course, you add it all up, and it's no surprise that we've seen a very sharp weakening in the currency. Now, going forward, I would argue that we're probably going to see a little bit better sentiment for the rupee. The currency has already absorbed a lot of bad news. Oil prices are likely to soften. And I think going into next year, we'll probably see some return of foreign inflows into India. So all of that should help the rupee to stabilize or even strengthen from currently quite weak levels.
Mitul, let's pick up on the yuan. You're expecting an outperformance. Why an outperformance when the economy is weakening?
Well, I think in part it's a bit of a contrasting story, at least for now, compared to India, where we've had China's had pretty strong inflows in terms of portfolio, in terms of equity and bond flows. For example, the northbound Stock Connect flows have been pretty strong in recent weeks and months. Bond inflows have remained fairly firm. Foreign direct investment flows have also been strong. And you add that to a burgeoning current account position, and it's no surprise again that the RMB continues to outperform. And I think that will remain the case given the strength of trade. China's exports have been really robust. And until probably around the second half of next year, it's hard to see the Chinese currency weakening too much. So at least in the near term, and I would say in multiple weeks or even months, we're going to see some continued outperformance of the RMB relative to its basket and relative to other Asian currencies.
On the policy front, we saw the PBoC cut 1-year LPR by 5 basis points. Are you looking at more cuts in 2022?
I think we will see an easier bias. I wouldn't say necessarily that's going to involve more cuts in the loan prime rate. I mean, it was a signal. Banks obviously had enough liquidity to be able to cut the LPR marginally. I think where we're going to see more injections is via liquidity, maybe certainly more RRR cuts going into the first quarter. I wouldn't be surprised to see another 50 basis point move early in the year in RRR. I think we will see more liquidity generally. And then you add that to some stabilization in credit growth, a little bit, actually not even stability, an increase or acceleration in credit growth into the early part of the year, increased special bond issuance, some easing in regulations. And it does seem as if officials are trying to put a bit of a cushion under the economy. That's not going to stop it from slowing significantly, but at least it may prevent a very, very, very sharp slowdown and some further ructions in the property market.
Mitul, give us a sense also of putting your other hat on, and that's a Europe strategist. What does 2022 hold for both the euro and sterling?
Well, I think in the near term, I would say both currencies look like they're going to remain under a bit of pressure in this environment. Sterling in particular, where you've got the potential for fresh Omicron restrictions coming into the UK. We've got Plan B, but we could end up with Plan C or Plan D, with more and more restrictions going into the end of this year. And that could be significant in terms of its hit to growth, which we think will weigh on sterling going into next year. And then, of course, the euro is still a bit more range bound. We've had this sort of 112, 114 bias in our view for euro dollar. But again, I think we may see a little bit of recovery in the euro into the first half. But Omicron has changed a lot of things. If that means more significant growth restrictions, an easier stance from the ECB, for instance, it could mean more downside for the euro in an environment where risk aversion and volatility, obviously we've heard a lot about, could end up picking up, and that could weigh on the euro as well.